Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 20th of July. So over the weekend, tensions with China have increased, not only with the UK but US and many other locations around the globe as well. We've also seen record increases in virus infections as well. But on a positive side, there does seem to be some sort of tentative deal now emerging with the European debt relief program. So let's take a look at a few markets here that we're keeping an eye on and some of the opportunities that we're looking at the start of this week. So if we come across to the Dow first of all, we can see that if we take a look at this on the daily time frame to start with, we can see that the market has actually rallied on last week, hit 27,000, and then we've had a sort of sell-off since. Now, not surprising really that we're seeing some weakening within the context of this trend, as last week that market did extend quite some way away from the sort of general structure of the trend. Now we can see on the daily that we've got support levels back into 26,000, but if we come down the time frames a little and take a look at the 8-hour chart, we can see that the market is pulling back into levels of support a little bit higher than that 26,000. So we've got 26 sort of 250. In actual fact, the levels are a bit tighter on the 4-hour time frame at 26,300. But the general structure of the trend here looking particularly sort of nice. Now, what this tells me here is that if the market gets underneath these levels of support, then things are going to look particularly bearish. A break underneath the sort of 26 sort of 300 area here, if we look at this on the 4-hour time frame, sees us into 26,000 sort of fairly easily. Below 26,000, then those daily time frames are looking particularly perilously weak. On the long side here, though, of course, we can see that the market's sort of finding support around these areas. We've got a couple of levels of resistance to get through at 26,500 and 26,600. Above those, well, then we've got a pretty much clear trading window of 400 pips up to the 27,000 level again. I think that the path of least resistance for the index markets is to the long side, even though there's lots of negative news out there. The Fed printing press is always sort of running and bound to pump more money into the markets at some point. If we take a look at the precious metals now last week we were looking at gold long. We still like gold long. Again, with the amount of stimulus that's going into the system, it does, even though that gold is at near record highs, it's still undervalued compared to the amount of stimulus that's been pumped into the system, and there is a correlation between the two. So still liking gold to the long side. You can see that 1800 here has really sort of been support for the market. It's been unable to really sort of break underneath here. If we got underneath this consolidation on the daily time frame, well, then things would look a little bit different, and we'd be seeing sort of 1750 probably on the cards fairly quickly. But still liking the long side to gold, and the same with silver as well. If we just take a quick look at silver, I wouldn't be at all surprised if we start to see $20 in silver fairly soon. Coming over to the currency markets, one of the picks that we were looking at last week was Aussie dollar above the 70 level. We're still liking this above 70. All that's happened last week is the market consolidated under the 70 level, as we can see, and it's very close to breaking through now. Still liking this one to the long side, and it opens up into a new trading window once it gets through there. Also on the currency markets, on the euro subject, we're liking some of these euro markets long as well. These are quite strong this morning on the anticipation of that euro debt relief deal being sanctioned and signed off. Now, this market has actually sort of bottomed out, whereas a lot of the other markets like Aussie dollar have been in long trends for a while now. The Euro Swiss is only just starting to turn around. This market here has hit sort of bottoms recently, as we can see here on the weekly chart. I think we could be seeing moves up towards that sort of 108 sort of 40, 108 sort of 30 area fairly soon. And you can see that that's the next sort of major decision point for this market. Come down to the daily time frame and just sort of zoom out, we can see that structure in here, and that's around 108,300. So still plenty of distance up there for the market to the long side. So again, with Euro Swiss, we're looking at long opportunities for as long as this trend continues. So there's a few markets there that we're keeping a close eye on in the trading room going into the beginning of this week. I certainly hope it helps and look forward to speaking to you next time. Bye for now.